I'd like to imagine a world with just us and us alone. I close my eyes and breathe in, feeling, inhaling, sensing. I see you, as clear as day, as soft as the mist. Your warmth that calms me. Your touch that brings me back to life. You taught me to smile at each and every moment. I've known happiness with you by my side. Tropicana Grand Hill, you're the place in my heart.
A very good evening, ladies and gentlemen, and everyone watching us right now. Thank you so much. Thank you all for tuning in right now. My name is Amanda Andrea, your virtual host for today, and I sincerely hope that all of you are doing great and absolutely fantastic during this MCO, and most importantly, staying safe. Now, due to the COVID-19, as we all know, most of the industry continues to be in a pandemic slump. Now, this is no exception for the Malaysian property industry. 2020 has been a difficult year. What can we expect in 2021? Now, today, we're going to be talking about the advantages of investing in a property at a popular tourist destination. This is specially brought to you by the one and only Tropicana Corporation Berhad. Tonight's interview will also be available on these Facebook pages: Malaysia Kini, Tropicana Corporation Berhad, Michael Tan, Live Out Loud, MTLOL, Freemen HostAStay, and also on Kini TV's YouTube channel. Now, before I bring in our guest speaker, we have something very special for all of you watching right now. A chance to win a 100 ringgit IKEA gift card. Okay, all you have to do are just follow some super simple steps. Number one, like and share this video with your friends. You can tag your friends as well, but we need you to actually share the video so we'll be able to track it down. And to make sure that we don't miss out on you, what you have to do is set the post to public, okay? Because sometimes when you actually share it to your own friends, we won't be able to see it. So please make sure once you do that, once you share it, make sure the post is set to public. So like and share and answer a really short quiz on the link right there. So as you can see, there is a link pinned on top in the comment box. Now answer that short quiz and then you'll stand a chance to win a 100 ringgit IKEA gift card. So good luck to you guys who will be joining. All right, without further ado, let me introduce our guest for tonight, Mr. Michael Tan. Are you able to see him? There we go.
Hi guys, how are you guys doing? I hope everyone is safe at home, okay? And you are doing good right now during this MCO. Please keep your spirit up. I promise to give you as much information as possible so that we can go through 2021 with a much better and more exciting year ahead, right? So thank you for Amanda for introducing me. having
No
me
problem,
here.
Michael. No problem, Michael. It's a pleasure to actually have you here. Now, I know that Michael actually needs not much of an introduction. You can see all his accolades right behind him. He's specifically sitting there for a reason, ladies and gentlemen, so you can see all the trophies and awards he have won. But I must give him a little bit of an introduction to those of you who may not know him just yet. Now, Michael is a renowned property investor and educator with his investment portfolio covering 5 countries from Cambodia, Thailand, Singapore, Hong Kong, and of course, Malaysia. With more than 50 properties accumulated over a period of 12 years. Now, Michael is no stranger to crisis, having survived the 2008 subprime crisis, where he not only got himself out of poverty, but also made his first millions through property investments. Last year, Michael and his team were actively investing and claims to have invested more than 113 million ringgit into the market so far, profitably and safely. Michael is here today to share his invaluable investment strategies on how to overcome these very challenging times. Once again, thank you, Michael, for joining us.
All right,
now,
thank you.
Also joining us tonight, we have Mr. Jordan Oon, CEO and founder of HostAStay. Now, Jordan, let's see if he's going to come up pretty soon. There we go. Hello, Jordan.
Hello, everyone. Hello. Thank you, Amanda. Hello, everyone.
No
I'm Jordan.
That's great. Now, Jordan, I will have to introduce you as well and give you a similar introduction to Michael, as both of you are truly our honorable guest speakers for today. So we're really excited to have both of you here. Now, for those of you who don't know, Jordan founded HostAStay, of course, in 2017, a short stay management platform which has won several accolades and currently services more than 3,000 units. HostAStay helps property investors and Airbnb hosts reap in profits from their properties. HostAStay has grown quickly with more than 80 million ringgit in transactions on his platform alone. Its proven track records have earned him numerous awards and accolades and exclusive speaking invites, including in Tech in Asia in Jakarta, Create at Alibaba, the Rise Conference in Hong Kong. I was actually there. He's also the top 100 most influential young entrepreneurs, and HostAStay is also part of the top 50 enterprises. Hi, Jordan. How's everyone doing?
Great.
Oh, no energy. Great. That's it. Michael and Jordan, how are you guys doing? You guys doing great.
Okay. Oh yeah, I just realized right now it's Michael Jordan right now. I think if you put 2 of us together, we become like as tall as Michael Jordan himself.
Probably, but yeah, mix your names really, really easy to remember.
Yeah,
but
I just realized.
Our fantastic guest. So I think that's just like the tip of the iceberg of what the two of you can actually bring to the table. And I'm really excited to have both of you here. Now, ladies and gentlemen, to everyone watching at home, we're going to go straight into the questions, starting off with a question for Mr. Michael Tan. Okay, so Mr. Michael, the first most important question goes to you. Tell us, what was the overall view of Malaysia's property outlook last year in 2020?
Wow. Okay, I have to say right now, I don't know about everyone over here, but 2020 has been a really, really, I would say, a life-changing year. I would say it's very, very different from many of the other years. I would like to say it over here. I don't know whether people realize it or not, but it was a crisis. It's a year of crisis. When the pandemic hit, which is the COVID-19 pandemic, it actually literally paralyzed many, many industries last year. So it's not a surprise that property was also quite badly hit. So what I'm going to do right now is I've compiled several of this data. It may take a little bit of time to show you guys, but I want to show the audience some bad news, of course, and of course good news. So there's always some good news at the end. So I want to leave a bit of silver lining at the clouds there, so not to have it so gray. And I feel that it's always a mixture of both. But indeed, 2020 has been a challenging year for many of the industries. So let me just get straight into it right now. I'm going to go straight into the slides. So if you look into it, we're going to go straight into the Malaysian outlook. Okay, so from there, I'm going to cover a couple of things. Now, before I go straight into properties, I want to share something else before that. Properties is never the first impact of many things. It is always a subset of the economy. So if the economy does well, then the property market will do well, right? So if the economy does badly, then therefore you would get a bit of a slump coming in. So I'm going to show you a couple of features right now first, and I'm going to give you a couple of predictions. So it gets you a little bit more, you will probably have an expectation of what you're going to see in 2021, right? So let's go straight into it right now. This one over here is the GDP growth for year to year. And I'm going to show you some very interesting figures, okay? So everyone here, please hold your breath, all right? If you have not seen these figures before, just to share with you guys. So here we go. As you can see, all right, from this growth over here, we have one of the lowest dips in the last, I would say, since 1998. As a matter of fact, this surpasses 1998. In 1998, we have a negative growth in GDP year to year of about 7.2%. This year alone, in quarter one, okay, in March itself, it dropped an average of 17%. If you were to calculate it month to month, now this is quite scary because month to month, you would see that the average drop was at 28.7% in the month of April. Now that's a 30% reduction in GDP for that month alone. So the impact of COVID and the lockdown, okay, unfortunately, we're having our second lockdown right now. So please, everyone, be safe. The sooner we get out of this lockdown, the faster we flatten the curve, the lesser we're going to see this kind of experience. So if you can see from 2020 in April itself, we had a tremendous drop, right? And this is something that is quite critical to us in our industries. But I'm going to share a little bit of good news, all right? So let's just go to the next slide over here. And if you see this over here, there you go, okay? So there's always some interesting news, and this is what I like about Malaysia. We're very resilient. And I want to point this out to you guys that in the third quarter of the year, which is after July, you could see there was a huge bounce back, 18.2% growth. So I want to say this to everyone over here, it's not as bad as what people say it to be. Yes, there is an impact. I kid you not, there is an impact. Even today, there was a news coming out that in MCO 2.0, 90% of the retail markets are hit. That is true. You will expect to see a negative dip once upon a time, but the rebound is also equally as strong. So a lot of people are asking right now, then let's move forward for this entire year, right? What are we expecting? So I'm going to put a little bit of prediction moving forward. So as you can see over here, this is what I have. Right now, these are my predictions. These are not basically what is being shown on the graphs yet because they're slightly later. But in Q4 of last year, I would expect that it's not as bad a dip as in April of last year, right? Then in Q1, you would start to see a little bit of, it's MCOs are quite bad. So MCO 2.0, I would say there will be also quite a bit of a negative over there. But after these two things, I would say I would expect that the market should rebound fairly quickly after this. Okay, so now that you've seen all this, I don't know whether if anyone over here watching this right now, you have any concerns or not, but I have some good news also, so don't worry about it. But let's talk about the statistics itself. What does this have as an impact to the property market, right? So if you were to see that, the next part of the slides would then justify things over here. So if you can see from the next part of the slides, okay, let's talk about the housing market itself. And in the housing market, okay, this hence is the results. Right, so it's of course a bit of a lag, as you can see, as the impact of April came in, it would then come into the next quarter, which is quarter 3. The property market declined to 0.9%. Now that's a negative one. For those of you who don't know about this, let's talk about a 10-year timeline. This is one of the lowest point in our market, right? So we've hit a bottom, right? Now, if you look into this chart over here, here's the good news. Here's the part where I think, like I said again, Malaysians are quite resilient. All right, so this is a little bit of my silver lining over here. As you can see, there's this huge spike at the back end, and that shows that we were very quick to go into shopping after the drop. So if you can see a very low drop, suddenly you see from the residential properties, there's quite a resilient move going forward. So I can say that the demand for properties is still there, but there will be rather mixed along the way. So if you ask me the outlook of 2020 and what will this bring towards 2021, let me show you my final graph, all right? So I don't want to take too much of time, right? I'm going to give this up to you guys. So here's the whole summary of things. No, there's not a picture of Mount Everest. That's actually the graph of our housing price index for the past 10 years. As you can see, we had our boom years in 2008, moving forward all the way to 2013. After which, from 2014 onwards, all the way to 2020, we had our decline. So a lot of people may be asking, hey, Michael, you know, where are we at now at this moment? I would safely say that we are at rock bottom. Right? I would safely say we're rock bottom. So that's pretty much the good news. Can we go any lower? Maybe a few more basis points, but I'm expecting in 2021, I would say safely, we are looking forward for a recovery year. Maybe in the later half of the year, but it's definitely going to be, I would place it as a recovery year. And I'll share that later on, right? Why? So hence, that's why I say in a very quick nutshell, this is my overall for the property outlook, but I'm having a positive vibe towards the future, right? I think the worst is over, and we can expect that the market will recover much better moving forward to 2021 and 2022.
Keyword, the worst is over. Fingers crossed for that, right? Michael.
Hopefully, yeah.
Yeah. Thank you for that, Michael. Now, my next question is to your counterpart, Jordan. Mr. Jordan, tell us, how was the performance of short stays at HostAStay pre-pandemic? So before the pandemic.
Yeah, so we are in 2021 now, or 2020 is nightmare. But if you're asking 2019, we was having a fabulous year. We was expecting Visit Malaysia year 2020. Oops, there's a call coming in. One moment, right? Okay, so we was enjoying a very, very good year in 2019. And in 2020, we started off the quarter, and the records, we are expecting a very good year. The bookings are coming, and pandemic hit, all right? And it is so crazy that it is just refunds alone are killing the whole industry in the first quarter. And once we wake up, it's already 2021. I didn't know how 2020 went by.
Oh my goodness. I actually can relate because I do Airbnb some rooms as well. And the moment the pandemic hit, it's not even about people not booking. It's being afraid to accept these bookings as well sometimes. Yeah. Okay, so tell us, of course, 2019 was great, as you said. And right now, I wish it's 2021. I wish I could say post-pandemic, but we are still in the pandemic with the MCO 2.0 now. The next question is still for you, Jordan. Now, when COVID first hit 2020, how badly did it impacted your industry? You know, I have so many questions. What did the owners do? And now hoping that 2021 is a year for recovery, what can the owners expect or do?
Yeah, so it is very bad, but how bad was it? I have done some research from UNWTO. Let me put up some information from UNWTO. Right. Okay, so the impact assessment, this was done in March 2020, right when the pandemic hit. So there was an estimation that it will hit the whole industry from tourist arrival down to 20 to 30%. Right, that was in March. And the good news is, I'll say about the good news first, then we go into the bad side of it and how bad it is that tourism will not have an issue. The bounce back of tourism, as you can see here, every time there is a crisis, tourism bounce back. Tourism is not an industry that will die, but how long does it take and when is the pandemic coming back? And it has proved capacity to bounce back and multiply recovery to other sectors. We need the airlines to start flying. We need people to start moving across city to attend events and so forth. All right. And this is how resilient the tourism industry is. The tourism industry has a very, very strong average growth. But we need to look at when is it going to end. So we are expecting it to be Q3 of 2021. And experts actually suggest that the rebound might only occur in 2022. So we hope to say 2021 is post-pandemic, but we do not know. But the earliest estimation would be in Q3 for the travel industry to recover. But, well, some do expect it into 2022. Let's look into more detail. International tourist arrival is at negative 72%. You can see that the rates compared to 2019, which was a great year, it is very bad. Malaysia, the international arrival is not coming in, is negative 99 to 100% year on year. And here you can see it is a very interesting number here. This is pulled from all the hotel bookings and the short stay rental. And you can see the travel sentiment is at a positive 28%. I'll just focus on hotel, air DNA and travel sentiment. If you are interested with the numbers, you can go to UNWTO site. Okay, if you look at the hotel bookings, it is very, very bad. It is down to negative 63. It is very, very low. Right? But if you look at this is the short-term rental. Short-term rental is only at a negative 8%. So it is pretty resilient for the Airbnb or the short-term rental market because it is, I'll show in the next few numbers, because the long-term demand, people staying 1 month, 2 months, or 3 months has actually increased, right? So Airbnb has also IPO'd. It is pretty interesting. On the first day, it skyrocketed 135%. That even Brian Chesky, the CEO, did not expect it is possible to still go public in 2020, right? And if you look at the travel sentiments number, all right, this is the world number, all right. It is, but here in Asia and Pacific, until May, people are still not traveling, but there is a pent-up travel demand. So the question is, what are the owner expecting? So here, the short-term rental market is not as bad comparatively to the hotel industry, but there is also short-term rental is not only to tourists, it is also for local tourism. And these are some numbers for domestic market. You can see that very interestingly in June, July, and August, it actually hit back the average rates of 2019. This is for short-term rental. But the stay duration, right? You can see that in the February, March, and April time, it spikes up. People are staying in the months. We actually have a lot of guests that are stuck in Malaysia. So they actually extend their stay, continue. Some started on in February and actually checkouts in May. So you can see that the stay duration is pretty high in 2020. But the lead time of booking is almost, they don't do 2 weeks ahead of booking. Now they do, okay, if I'm going to travel tomorrow, I'll start booking today. So the lead time for travel is actually greatly reduced. So if you can see here, one of the best news that I'm looking for 2021 is I'm hopefully that the borders for Singapore opens up. Okay. In Malaysia, we are not worried about from the European and the States, all right? We just need 5 countries here or even 4 countries. So Singapore is top of it, all right? And if Singapore borders open back, we are pretty good. And if Indonesia and China, Thailand, and even Brunei opens back, Malaysia tourism will be recovering better. And the whole Asian market is actually recovering better from COVID compared to the Western side of the counterpart, right? So these are some of the numbers that I pull up from UNWTO and some of our research.
Okay.
Fantastic. I was actually taking notes. I find it so interesting that we basically just need 5 countries to open their borders to us. That's actually some fantastic research. 5 only. But you said 1 will be happy with Singapore?
Exactly.
Yeah.
Okay, well, thank you, Jordan. Now back to Michael. Next question for you, Michael. What is your prospect for the real estate market in 2021? Can we see, well, this year basically, can we see a higher demand or a stronger rebound? I know you mentioned it already, but give us more in-depth details on this.
So I have to say this also. I was also caught by surprise this year. I actually last year gave a couple of outlooks out and I was more aggressive than most people. I was hoping on the vaccine. I think everyone is actually looking into this as the end game. You know, if there ever was there was a movie or this, I think the vaccine would be the savior of this all. And looking into it, I expected the rollout to be faster than what it is today. Now, that's number 1. Number 2, I made one fatal mistake, and that was also not to look about the second wave of COVID or third wave of COVID. I thought after CMCO, things would actually be relatively controlled, but unfortunately, thanks to Jordan, okay, and the tourism business in December, it actually boomed. We had a short Cuti Malaysia in December, and then what happened was we had a second outbreak. Right, so here we are, hence in January, we're all stuck at home, and that's why we're having this on 3 different sites and all in Zoom, you know, and once again, we are back to this kind of reality. So, you know, different year, but the same event that's happening again, you know, maybe a bit earlier on it. And what I want to say right now is this. So looking into this, I think I personally have to take one step back by saying that we may not get out of this as fast as what I expect it to be. So I've kind of pivoted down to two major points, all right? And by the way, if those of you don't know, today's cases are 4,275. Now, these are huge high numbers. These are huge high numbers. We are like number 8 on the list, right? Indonesia, of course, is one of the top in Southeast Asia, but we are one of the highest countries right now in Southeast Asia, in Asia actually in particular, that has got daily cases on the rise. So hopefully we are able to flatten this curve, but let's come this into perspective for the market in 2021. Everything, including even today, transactions in the property market has been an all-time low, of course, because they're unable to go out there and view the properties. So transactions will be actually low from moving forward. And before I say all this, let me just pivot it into two summary points, all right? I would say the dependency on the market recovery will be coming from these two main points right now, which I want to share with everybody. Right? The first point I would say is actually, number one, the effectiveness of our government and of course ourselves, all right, in keeping the spread of COVID to a minimum. Now, we are not out of the woods yet. I missed this point last year. I said, I assume that since the vaccine is out, okay, we can go out there. And I think there's this complacency. Because of this complacency, people are thinking, doesn't matter anymore. The borders started to open. Okay, and that's where we started to have the spread. So the responsibility of minimizing the COVID spread is very vital to our economy until step 2, the vaccine comes. So when the vaccine does roll out successfully, right, then we would then be rest assured that the market will rebound. Then I'll talk about the rebound later on. So I'm going to pivot these two main points first. So point number one, if we're able to maintain, okay, or flatten the curve, all right, within these 2 points, and no more CMCOs or MCOs until the actual final rollout of the vaccine, then I can safely say we're going to come up with a relatively smooth recovery. But that's a huge question mark. So there's no charts, there's no graphs for that, because this is something which I call a question mark. Already right now, until February, and this is very crucial because Chinese New Year is one of the other major holidays left before the whole year starts to run. So can you imagine right now that if we are still in lockdown, even after Chinese New Year, and maybe we have another MCO 3.0, I think that it would paralyze our economy until today. So I would say rule number one for me right now is the efficiency of us to suppress the COVID spread until the vaccine comes out. Now, let me now talk about the vaccine. All right, so this is the part where I'm also worried about. If you look into it, we haven't rolled out the vaccine yet, right? The closest rollout to us is our neighboring country, Singapore, which had the vaccine came in on the 18th of December. Now, if you look at them, the rollout actually is right now only ending the phase for the frontliners, and they're moving on to the public pretty much soon, either, I think, next month. So if you look into it, the rollout phase will take anything from 2 to 3 months to 4 months, looking into things. In our articles right now, the rollout for the vaccine, right now, they're trying to say anything from late January, which it looks at it, it's not going to be coming anytime soon. So probably going into February to March. Now, if we do have it in late February and March, right, we're talking about a 3 months to 4 months rollout period. We would easily hit the third quarter before we finally see the end of this pandemic, and us being able to control the numbers. So, ladies and gentlemen, we're talking about two-thirds of this year, okay, in a controlled environment, in a suppressed environment, right? But I give you the good news, right? How many of you right now, if you're watching, because we are live, right? So I want to ask, how many of you right now are dying for holiday? Okay, anybody doing that right now? Right? How many of you want to go out there? You know, so this is what I want to share with you guys, is that this pent up, and we've seen this before. There's going to be pent-up demand coming in, and I would put my case strongly that once, you know, this pandemic is over, in Q3, there's going to be a huge increase. I would still put my bet into tourism. If you look into it, tourism is the hardest hit. So we always call it first in, first out, right? The first hardest hit industry is tourism and travel, right? Both of which, as a matter of fact, once the borders open, they will start to see local traveling, local tourism. And local tourism was the key to our economy last year in the third quarter as well. So you can expect this coming up pretty fast, very fast. right? So with that coming in, yeah, everyone's dying for holiday. The moment I put the word holiday, you can probably Google it. And I think there's the most Google word coming up. No, when can I go for my holiday? So I would say that with local tourism spurring the things moving forward, should we control the pandemic, the outbreak, then by Q3, when the international tourism coming in, especially I do agree, Jordan, Singapore is super key. It is not only a tourist destination, it is also an economic partner, right? There are many Malaysians and Singaporeans that are stuck between the borders, so they're unable to work. So the economy is kind of paralyzed over there. And the moment we open the borders and we allow the flow of economy to go both ways, I would believe that things will start to go up as well. So it's only at Q3, but I would say at Q3, I expect the same rush I showed you earlier last year, whereby you would get quite a fair bit of people coming in. So I'm putting a very strong bet on tourism. I'm also putting a very strong bet on airline industries and travel. So this will be the main key factors that I will be looking onto towards the end of the year to push us out of this recession and hopefully gain us to be going back to the road to recovery. Okay.
Fingers crossed for that. Definitely, Michael. I completely agree with what you said. Hotel stays, as Jordan has shared as well, hotel stays has increased even during the MCO because, not the MCO, I forgot which one were we in, CMCO or something, because the locals are dying to go somewhere. Yeah. So if they can just go anywhere, even if it's like 10 kilometers away from home, but just away, they're raring to go. So yeah, definitely a lot of pent up need to travel. And the moment the pandemic is over with the vaccine, fingers crossed, I do believe what you say will definitely be true.
I know this sounds funny, Amanda, but I can't wait to get into an airplane again. I don't know why, I've got this thing about it.
I love flying as well. I understand. Yeah. I understand. Now, the next question is going to be to Jordan, as Michael have mentioned, in relation to people, wanting to get out of their homes. Could you tell us what is the rental ROI in somewhere specific like Genting Highlands compared to Kuala Lumpur city centre?
All right. During the CMCO, we did not expect a huge rebound. All the rooms that we have like Genting Highlands are all fully sold out, right? The ROI is not. I would say that the ROI comparatively to the city center is much better. But then when we talk about the occupancy that is hitting 80 to 90%, but the rates that we are selling is already much lower. But comparatively, we also have a lot of units in the city center. The average rate in the city center is around 20%, 30%, unless that we have converted it into a long-term rental of a month or two, right? So why is it having such a demand? I actually travel myself every single month to the Genting Highland. The reason is because of the weather. The weather is so cooling, and it is only an hour drive away from the city center, and everyone just want to get away. But if you're already stuck in the city center and you can't really travel overseas, you can't really go anywhere else, and you're looking for a cooler weather, Genting Highland is the best place to go to. And it is along the way, the occupancies through weekdays and weekends are pretty good. And it is actually similar to a few other highlands areas such as Cameron Highlands and so forth. But comparatively, you can't just go Cameron Highlands from KL quite often. But the highest visit frequencies that I have to Genting Highland was, I think, 4 to 5 times in that single month. So I went out with my family, then I went out with my friends, and I went out for work. So it becomes a very it's a getaway that everyone wants to, because I love travel myself, which is why I'm in this industry anyway. I have my flights canceled overseas. I have a few trips canceled. And that's why comparatively, city centers occupancy, you wouldn't go and book an Airbnb or a hotel in a city center to get away from home. Okay, so ROI is at 80-90% compared to city center at around 20-30%.
Now, you mentioned Cameron Highlands just now. Can you tell us about the rental ROI when you compare specifically Genting Highlands with other tourist destinations all around Malaysia?
Yes, that's a very, very good question. So comparing Cameron Highlands and Genting Highlands, Cameron Highland use better demands of the rates. So for example, a night can actually go up to 1,000 ringgit per night, but it is only on weekends. But Genting Highland, in the contrary, the higher occupancy of 80-90% is actually on weekdays and even weekends. There is consistent people coming over because last year there was this some of the staff will be like 25% work time or forced leave and so forth. So they have a day off on the Thursday or a Wednesday, and a lot of them just found themselves at Genting Highlands. So Cameron Highlands, it is a pen-up travel. Everyone go up there, but I dare not go there because the traffic is crazy. Okay, so the rates are good, but comparing the returns, occupancy to returns, I would say Genting Highland yields one of the best in the whole Malaysia.
Wow, that is some really good information. I would actually expect that because there's a lot more things to do in Genting Highlands, I reckon, right?
Exactly, and with the new developments up there, and even properties are selling like hotcakes up there. I don't understand why.
Well, now you understand why. You should understand why.
You need to ask Michael.
Well, thank you so much, Jordan and Michael, for once again agreeing to the session. I'm not letting you guys go just yet, but I just need to tell all our viewers, just need to remind them, okay? As I've mentioned earlier to all our beloved viewers, from where I can see Malaysia Kini, we've got 278 of you watching us. Thank you for that. Now, tadi kan, I've already reminded you guys, we have a 100 ringgit IKEA voucher to be won. All you have to do is like and share this video. Now, when you share it, please make sure it's on public so that we are able to track. And then secondly, answer a really short quiz. I can see it's actually pinned on the comments. There's going to be 10 lucky winners. So good luck to you guys. All you have to do is like and share. And number 3, answer the super short quiz. Okay, all you have to do is click on the link. I can see it on the comment right now. All right, and we are going to go back to our interview session, and this question will take us to Mr. Michael. Now, Michael, tell us, buying a property in an area that is known as a popular tourist destination, you know, as we've been talking about Genting Highlands and, you know, all these popular tourist destinations, can you tell us what would be the pros and cons?
Okay. Well, okay. Buying properties. Now, I'm going to be specific about this. I guess I can only help you guys in terms of investments. All right. So I'm an investor right now. So you say if you want to buy a property in a popular tourist destination as an investor, then I think that it may be quite a good idea. All right. So one of the things I want to do now, I'm kind of weird right now. So I know when those of you watching right now, you may be asking, hey, Michael, is this a good time to invest in times like this? You know, hey, the market is down and stuff like that. Do you think this is still a good time? Now, like I said, I've survived in the last crisis, and I can tell you right now, I've made my big bucks in 2008 when I went in there and bought properties when nobody else would. So I would say, yes, this would be a good time for you to invest. However, you need to really know that the pros and cons, just like what Amanda has actually mentioned to you. So I'll share it out with you guys right now. My firm belief is this, okay, and I'm a little bit more of a risk taker. So if you're a little bit more risk adverse, you may not want to follow this. But imagine what I just said right now. If you knew that tourism, either local or actually internationally driven, would be coming back in Q3 of this year, knowing that that's going to be the first market to come in, then why wouldn't you invest into tourism today? Right? Only because you have a suppressed market. But in suppressed markets, that's where you get the best price. So one of the answers I'm going to give you right now is that yes, it's one of the best areas or best time to buy into tourist located areas right now is because of the opportunity that it presents itself in current times. But let's look at the big picture. Okay, so why would you buy into a tourist related area is because of the variance of rentals coming in. The cash flow is beautiful. I can tell you this right now. You can get a vary from long-term stay to mid-term stays to even the Airbnb. So that's where Jordan comes in as a professional. He'll tell you about it and how the rates are like. And never in my life, right? When I first started as an investor, we are if you get a 4% to 6% in rental returns, it's considered very good for property. But ever since we had Airbnb, which what happens is you thin the line between a hotel, okay, and a house. You are able to now rent a house for daily rents. It has actually increased the rentals up to a close of 18 to 22%, right, in different areas and different spots, especially in hot areas. So this would be something that would give you guys good rental returns or incomes coming in. That I would see as a big pro if you're an investor looking for property in areas like this. Now, it wouldn't be fair for me to say all this without saying the bad things. So bad thing number one is that you will have periodic, right? It's always periodic. It's always periodical. It's always seasonal, right? You have people, people going away for, let's say, winter time, the year ends. Year ends are the best time for us to make the money, make the money from the tourism and the holidays coming in. Okay, and of course, there's this super bad news we have right now, which is this unpredictability of a COVID pandemic. You know, I pray we will not have this for the next 20 years to come, or 30 years to come, or never in my lifetime again. But if there is another shutdown, then of course we're going to get stuck, right? So if you don't get stuck, I think then with all this, if we don't get stuck, then this will be actually a good time for us to go in and buy and invest, because these are areas whereby I would say would give us good returns. I want to leave with one more quick note, right? For those of you who are looking into tourist destinations, always go for the best bets, right? Now, what are the best bets? I want to share this out on a broad picture. Malaysia is well known for its diversity, okay, in culture, and we are very popular around the world. One of the places I want to name is all the UNESCO heritage sites that we have, all the way from Sabah, Sarawak, all right? And of course, in Penang, we have our, and of course, in Malacca, the Jonker Street area over there. So these are the popular destinations, and also the Highlands, right? We have Cameron Highlands, like what Jordan has mentioned, Cameron Highlands and Genting Highlands. Now, statistically speaking, let me just share this with you guys right now. Last year, even with the borders closed, the highest Airbnb, okay, all the renters coming in were all from all these hotspots, right? I only know for West Malaysia, so I know from Penang side, okay, Malacca side, okay, and Genting Highlands, Cameron Highlands. These are the areas whereby we had the highest occupancy rate for Airbnb and all. So I would say that if you want to have a mix of both local and foreign tourism, you should go for a site. You should go for an area whereby you get both the flavors that attract the local and also the foreign tourists. So if you get the mix of both, I can guarantee you almost all year round, you'll get a more even return coming in. And I think that you can't go wrong with tourist spots. That's what I feel. All right. Okay. I hope I answered.
Yeah, you did answer that very clearly indeed. So thank you, Michael, for giving us the pros and cons. I really like talking to you, and I'm sure everyone loves that as well, because you do give us that negative, but you always have your silver lining that but everything's going to be fine. So
that's what I tell my kids all the time. That's the way I should do it. No. But and yeah, I believe in that. Yeah.
Yeah, that's great. Now, speaking on that topic as well, but to Jordan. Jordan, can you tell us what are the criteria to make a good short stay rental accommodation?
Okay, sure. So first, we will define what is a short stay rental. Right, a short stay rental is not like a daily stay alone. So anything that doesn't have a tenancy contract, meaning a month stay, a week stay, or even 3 months stay, are all categorized as a short stay rental. But every types of short stay rental of a daily, weekly, or monthly needs a different criteria. But the most minimum criteria that is needed is that it should be guest-ready furnishing, meaning that you can just pack your bag and you can move into the accommodation. So if it's daily stay, then there is 3 key places that is the criteria of the location. The first thing is tourist area. Second thing is transportation hub. The third thing is high commercial activity. But due to pandemic, high commercial activity are suffering at the moment, but we are talking of a criteria as a whole. All right. So if you look at the weekly stay, there is also the lifestyle area. There are actually people booking stays, and because a lot of people are stuck at home during the pandemic, and they have a lot of live session or even Zoom sessions at home, and that is getting too noisy. So there are actually people booking rooms during the weekday to actually get out of home to actually work. Okay, so it is becoming a new lifestyle of people moving area. And the good thing about short stay is this: you can convert your short stay into long stay with a better value, but you can't convert a vacant property that is not furnished into a daily stay. So actually, if you want a better return for your properties, always turn it into short stay ready. All right, but there is a catch. The catch here is your building's JMB needs to approve you to run short stay, right? So it is always preferred to be in service residence, right? In service residence, and if the facilities in the building and everything is a plus point if they welcome the guests. Yeah, so that is a slight catch. Yeah.
Forgot to unmute myself. Well, you touched on the JMB resident approved to make sure that the management approves it. I've actually heard many stories and even like notices on my friends' apartments when I go to visit. They would have the notice like no Airbnb, not allowing short-term stays. So there are quite a lot of condos in perfect places that actually do not allow Airbnbs. What is your take on this?
Yes, that is the most worrying part that people have in short stay. Actually, the government, good news to everyone, the government is not going to ban short stay, right? So if they are going to ban it, they can just issue a countrywide order to ban short stay. But they have also started a team, and HostAStay is invited to be part of the team, and they have gone through all of the regulation requirement, and they have already drafted the guidelines. So this regulation is not implemented yet, but there are already divisions that are actually referring to it. And so one of the key criteria is the rights are given to the JMB. Okay, so with the JMB here, meaning if you are even in a commercial property, but if your JMB says that you are not allowed to run short stay, the court will follow the orders of the JMB. With that in line, we have actually consulted buildings that actually sold their property for short stay to make sure that the bylaws are implemented, to actually educate the buyer that, hey, this building is for short stay purposes. So it is already well communicated. So this will reduce the chances of the building getting banned. HostAStay, our standpoint is this: we are agreeable to the regulation. Actually, globally, it is getting regulated. There is the Minpaku law in Japan. So a lot of people actually quoted from Japan that once they implemented the Minpaku law, all right, that 80% of the Airbnb was banned. But the good news is 1 year later, with this regulation, they have already recovered. So a lot of people are actually getting the regulations and getting themselves approved. So this is something that if you choose a building for investment purposes for short stay, please make sure to check if the building allows short stay in advance.
Definitely, we don't want to break any laws over here. And congratulations, Jordan, on your low-key sharing of being involved with the government. Very, very awesome for you. So congratulations on that. Also, another question still to you. Are you able to tell us how we can generate better ROIs to investors?
All right.
How are we able to?
Yeah, this is a very key question. A lot of people will think that the ROI is only dependent on the location and the people paying us. But we need to understand that from an ROI perspective, you have the revenue, then you have the cost. Okay, so as an operator, we won't pay for the cost. So how do we reduce the cost is a very critical question. So if a development that if you go in, so some of the criteria that we have, this is, so when you choose an investment property, for example, if the developer has already service lift, all right? So I give you an example, I don't name the project. We went into the project, there is 300 to 400 units of properties inside, and there is only 4 lifts without service lift. It was a hazard running operation there. The cost of operating it is so high that it's actually eating up into the profits of the owner. So that is one of the first thing that we're looking at if the developer actually provides facilities such as reception, service lift, storage area. So this will reduce the cost. Then the second thing that we look at is how do we actually provide better service in the building, okay? And also consolidate the whole operation to reduce the cost overall. And the main thing here is, end of the day, we want the property to increase in value. So sustainability is another thing that we look at. By looking at revenue, cost, and sustainability, this will generate the best ROI for the investors.
Thank you very much, Jordan. Right now, we're going to direct our next question to Michael. Michael, tell us, since we're talking so much about holiday homes, tell us how likely are Malaysians to invest in holiday home like properties, or is this properties more towards investors only, like international investors? Yeah.
I would say that, you know, it's actually it's a very mixed question over here. I think thanks to Jordan and many of the people who have actually promoted Airbnb, more people are tending to, you know, rent a space and then go for the holidays. But you know, that if you ask this, there's an interesting question, because I want to kind of bring it back to a trend I saw recently before the pandemic. So we're talking about pre-pandemic periods of 2020 when people had a little bit more money. Okay. So we started to see this trend whereby Malaysians were actually getting more second homes, right? They were actually thinking of getting a home away from home, maybe somewhere down in Penang or nearby the beach, all right? Or you could go all the way to Genting Highlands or Cameron Highlands up in the Highlands, where they would get another condo over there. It was actually a very popular thing for people to do during those times where they go out there and to get a second home, right? Now, so I would say that, no, if when things come back again, I won't be surprised if this would start to pick up again one more time. I don't think it'll be a surprising thing. Imagine this right now, cooling climate. It's something that's very easy. It's very easy to attract you, and with a travel period of only about 45 minutes, right? I think that it's not. I won't be surprised if people would go out there to get their second home. All right, it's just so near away from KL area. All right. However, here's the interesting part. I'm reading some reports over here, and I'm going to put my second bet on this one, right? I was saying that, will Malaysians buy? So I had this question in my head. Will Malaysians buy in a holiday home in a property place like this? I wouldn't call it holiday home anymore, because if you've noticed, there is a change of trends these days. Nowadays, we don't go to work. You know, we are all in our homes right now, doing Zoom right now. And with all this connectivity and this work from home, it has actually displaced the population. You know, the technical fact is this. Look, guys, we don't need to work in the city anymore. We don't have to work in, not all of us, but there is now a certain portion of us that may not need to work in an office anymore. So with that being said, you could actually now work further away from home. So I wouldn't call it as a holiday home-like property. I would say that there's a high chance, if there is proper connectivity offered, right, in a very resort-like place, like for example, how many of you would love to work next to a beach if your boss allow you to? All right. How many of you would love to work in the Highlands, you know, Genting Highlands or Cameron Highlands, near a cooling environment? All right. If your boss allows you to. So I would say that this is becoming more and more of a lifestyle that of the future generations to come, that we may see people actually buying their first home, all right, in places like this. I won't be surprised. It is starting to be a trend in many different countries, and I feel that it will definitely pick up here in Malaysia as well. All right.
Michael, I definitely agree with you, especially with something that you know, people don't really talk about, but mental health. You know, you don't want to be stuck in the city anymore. People nowadays, you know, they're talking about mental health, and I think that it's actually a very logical thing to think that, you know, people want to actually buy houses away from KL. Yeah, yes, definitely.
Right.
Now, next question is to Jordan. We are getting a bit closer to the end. We do have some questions as well, but let me have my final question to you, Jordan, before we try to answer some of the viewers. Jordan, tell us, with your experience, why is short stay rental more attractive compared to normal leasing?
Yeah, so I'll just use my own example. To be honest, if you can get, let's say, 5,000 rental, okay, compared to a 5,000 from a short stay, which one would you choose? Definitely, I'll go for the long stay rental, right? But I bought a property myself, right? And it claims to be able to rent out easily and sell it easily. When I got my key, my property was left vacant for 2 years. And because I couldn't rent it out at the rate that I want to, so I actually furnished it, put it up short stay ready. Okay, and I started to gain income. The first month alone from short stay, I'm doing 4,000 income, right? And along the months, it is getting ups and down, and it takes a lot of my time, which is why I founded HostAStay in the first place. So I'm looking for people to take care of the property for us, okay? So with this in mind, don't think that you are using short stay to do short stay return purposefully only. Right? When you are looking into a solution, you should look at, we only have one thing in mind. getting the best return for the investor. So getting your unit furnished, right? And if it's short stay ready, a lot of units are actually rented out to long stay anyway, right? It is we have rented out to 2 month stay. So for example, some of the ambassadors from China coming over to Malaysia to help, we actually rented out bungalows to them. So by getting your unit short stay ready, it creates a very versatile solution for you to actually rent out your property daily, weekly, or even monthly. So happily to say, my property that was vacant previously doing short stay is happily rented out during even the pandemic season. So that is my take in short stay rental.
Definitely from personal experience. So thank you very much for sharing that with us. Now, Jordan and Michael, we have about over 300 people watching us live from several different platforms, and we have some questions as well. Are you guys prepared to answer them?
Okay.
Yes?
Sure.
Okay. Yeah, I have to sound a bit like, oh my goodness, what are they going to ask? Can sound a bit it's so chill, just okay. What if they give something really difficult, right? Okay, so let me okay. Let us see. There we go. For the short-term rentals, if there are some damages caused by irresponsible tenants, will owners incur the losses?
I'll take this since it's short-term rental. All right. So yes. So this is the most worrying part for most people. I actually worried about this 4 years ago. There is a platform, Airbnb provides insurance for any bookings provided through Airbnb only. And we found it a problem because other platforms or even walking guests doesn't have this insurance. So we actually took a lot of our time. Actually, we have signed an agreement with Tune. So Tune is covering short stay rental, short stay, anything that comes through our platform that was recorded. We cover 30,000 all risk insurance. Everything, for example, if your sofa is spoiled or whatever, not at 50,000 on public liability insurance. So this is exactly because we also have this problem, and by having the insurance to cover this, we have guests that luckily they bought our insurance. Their property was burned because they have a birthday celebration in the room. I do not understand why do they celebrate the birthday cake on the bed. All right, and the whole house, and it cost them like 20,000 roughly, almost there. And the tenant, the owner is very happy that the insurance is going to cover that. Yeah.
Oh, thank goodness! I was so worried this was going to be a terrible story. Thank goodness the insurance is going to cover that. So this is from the Airbnb insurance.
From Malaysia, from Tune Insurance with collaboration.
Sorry, from Tune Insurance. Oh, thank goodness for that. I do believe we have another question. Let me just wait and see if it's going to pop up on the screen. There we go. So Hafizi asks, how do we know if a housing bubble is going to happen in Malaysia, Mr. Michael?
Okay. I would love to say this one over here. This is a good question. So how many of you here are concerned about this housing bubble? I mean, are we in a housing bubble? Are we still oversupply, and stuff like that? So I want to answer this right now. And I don't know if you can show the statistics. If you can show the statistics over here. There's one last slide that we shared the last time on the prediction one. So you try to get it up. Let me see if my team can get up the slides. And I'm going to show it by statistics right now, right? So if you can see this right now from the graph, I want to share this with you guys, is that, this is basically been in 2008. Now, 2008 was the last crisis. That was called the subprime crisis during the time. We were very little, we weren't that badly affected by it, but then again, there was fear in the market. The banking systems were having high rejections then, same like pretty much today. And what happened was that was the first decline. Then we had the boom that come up over there. And if you can see right now, we have been in a decline for a long period of time since 2013 to 2020. So it has been 7 years, guys. Now, it's not a, asked the question, I think it was housing bubble, will it burst, right? So our housing bubble didn't burst. It deflated, right? It deflated going all the way down. There's a reduction right now coming in, and I would safely say that this year and last year and this year, we've seen a great correction in the pricing already. The question you probably want to ask is, will this be the end of this? Will we not see any more? I cannot say that now. I don't dare say it, but let me just share this. Okay, this looks like Bitcoin, and you all know about Bitcoin today, right? I don't know if you guys play Bitcoin today, but if Bitcoin has dropped to, let's say, 3,500, okay, long time ago, would you have bought it then? Because I can guarantee you, the other thing is that today at 40,000, you'll be 10 times wealthier. And I can tell you, this graph here looks exactly like Bitcoin at the lowest point, I would say. I don't know how low can we go, but we are pretty much deflated in that sense. I don't think we're going to crash anymore. All right. So I would say I put my bet on property right now as match as I'll put my bet on Bitcoin as of today. Yeah.
Okay, well, thank you, Michael. We have one final question from Ms. Chia. Okay, I'm reading from the side here. It says, what is your view on the Airbnb business opportunity in Genting Highlands compared to Cameron Highlands post-COVID? Which location would be a much better return? I do believe we actually answered this briefly, but just give her a brief overview on this. I think this would be for Jordan or Michael?
All right, I'll take this.
Collaboration.
Yeah, maybe Michael can add on later.
I want to answer a bit later on also. Yeah.
Definitely Genting Highlands. All right, definitely. There is two things to this. There's two things to this. All right. First thing is during pandemic. All right, we can look into the local traveler. But if we are investing for a long run, Genting Highlands has a lot of things that are building up there, and you can visit Genting Highlands, and there are so many things to do up there, and the theme park is building for years, and hopefully it is completed. I don't know how is it going to run post-COVID, but if it is post-COVID and everything comes back to normal, there is the only casino in the whole Malaysia. There is the Highlands area. There is this shopping area, and definitely you can capture a lot of crowds. You can capture the local crowds, you can capture the international crowds, and also the lifestyle crowds. So definitely Genting Highland.
Okay. I want to add a little bit on this one right now. Yeah, I think Titing actually said the answer itself in that question. Okay, and the word is location, right? I want to share this, and every time you do investment, it's always about location. So the proximity of Genting Highlands to KL, Klang Valley, all right, and also to the airport, right, makes it, and also the highways that's coming in, and it's because of the middle point and closer to Singapore, makes it an ideal location. It really is, you know, and that is something that I would say, but because this is based on my own experience. I visited the place. I was also looking for opportunities to invest last year, and when I went into Genting Highlands, I was like blown away. Because it is so accessible to Klang Valley, there is so much a crowd that goes out there over the weekends. It has become a weekend destination, right? It's crazy. Now, I know Cameron Highlands does the same thing, but Cameron Highlands tends to attract more people when it's a longer weekend. When you have a Monday holiday or Friday holiday, 3 days holiday, then people tend to think of Cameron Highlands more because it's a more family place. But the Genting Highlands attracts the crowd on the weekends, and it's crazy. I'm not kidding to you. And I want to say this in a partially complaining as well, because I was stuck on the roads going up to Cameron Highlands for 2 hours. All right, and I made a mistake going up on that weekend. I said like, wow, I thought this was like COVID period, and unfortunately I contributed to the traffic jam. I was one of the person there, but the location is there. So yeah, attraction wise, everything makes so much sense. So I mean, just to answer you on that, on my personal point, and I want to say this to you, I had bad news. I had to get off the mountain or the hill on that day because I couldn't get a place to stay. No kidding. All right, I booked too late last minute, and I said, oh, how I wish we had more places to stay, all the way down to Gotong as well. Okay, Gotong Jaya area. So up and down, I didn't manage to book a place, so I just went home that day. Right.
That's a little bit sad, but luckily you weren't too far from home, as Genting is.
Yeah. So now I'm convinced I need to buy a place over there.
Definitely. Okay. Now, we also have one last question actually from George, but this question has already been answered. So I'm gonna tell George what the answer is. Our two experts, please correct me if I'm wrong. So basically, George is asking, can we insure our property for short-term stays? Most definitely. For Malaysia, we have the Tune Talk options as well. You can look into options because there's definitely insurance for your short-term stays. Am I right, John? Correct. Okay. Yes. Phew. Okay.
Now
Done
you're
it. Sorry?
Then you can celebrate your birthday on the bed.
No. Oh, I think that's so dangerous. That's crazy dangerous. Without a candle, maybe. Yeah.
Yeah.
Well, once again, guys, we're actually a little over an hour. We're still holding close to 300 viewers. So thank you for everyone who is watching right now. And most importantly, thank you to Mr. Michael Tan and Mr. Jordan Oon for joining us today. Now, ladies and gentlemen, it looks like short stay rentals can be a truly attractive investment, especially tourist spot destinations. I hope all of you have benefited from the sharing session just now. Tropicana Grand Hill is a new 112-acre freehold integrated retreat master plan situated within the cooling township of Genting Highlands. Now is also a great time to explore this investment opportunity in the form of a resort highland city of Tropicana Grand Hill. The Tropicana 100 campaign allows you to own 100% deals, which also includes 100% returns, 100% interest-free flexibility, and much more. For more information, please visit Tropicana Grand Hill Property Gallery or their official website at www.tropicanagrandhill.com. I'm Amanda Andrea. These are our wonderful speakers. Thank you all for tuning in. Take care, stay safe, and goodbye.
Right. Stay safe, guys. Bye-bye.
Your life in the clouds, the hills of whispering winds, the awaited arrival glowing in greenery, the magnificent moment of return, the melodic greeting with a smile, the water serene like a mirror, the soft hue of pudding green. The mountain's peak dances in the mists. The fresh strides towards recaptured youth. The perfect banquet for intimate companions. The best times to drink and laugh. The heart's greatest treasures at home. Presented to you by Tropicana Grand Hill Genting. One Highland City, 6 lifestyle experiences.